we've started to see the equity market firm up a little bit. And what's interesting here, okay, we've based, we've double bottomed here, we've come up. We're now in between the 8 and the 20 period moving average. We did an almost low test pin bar reversal yesterday. It does look fairly bullish on the hourly chart in terms of its formation. So if we have a look at the higher low here, so you had your 1, 2, 3, 4, 5 wave retrace. So this could be just a move higher here, and this could be the higher low. So we have tested the 100 period moving average here on the hourly quite a few times. We are putting in a bullish pattern, although that's yet to close in about a minute's time. So we've got a bullish engulfing bar here on the 10-minute, and I'm just taking a position here, really to position myself on the daily chart, and it's with the target shooter of where we're looking to target. It's about a 6-to-1 or 5-to-1 reward to risk ratio there. So just taking these positions here, so dollar yen, dollar Swiss, and we'll see how these run up over the next few hours or so. And if I see anything else, I'll be sure to give you guys an update. Hi guys, so just looking at the dollar Swiss trade, and I've actually just closed it at break even. We really didn't get the momentum that I was anticipating, that we usually get around this time. Maybe because it's FOMC later on today, there was an inclination we would be going sideways, which is why lower risk. I don't necessarily want to sit in a trade that's going to go sideways for the whole day. It would just mean that stops are likely to get run on a volatile news announcement, so it's just an unnecessary risk. So I did just take it off at break even. Now, if we do get some more decent price action and it does bounce off here, then I'll be waiting for confirmation that buyers are going to come into the market and look to capture it mid-cycle rather than at the beginning of the cycle. So we'll see how this one pans out. I still have dollar yen running actually. Again, if we look at the 1 hour chart, the level I'm talking about, it's still fine. I'm happy to give this a little bit more room to trade because the reward to risk is a lot greater as well. So I'm happy to sit in this one. Dollar Swiss was about a 1-to-1, 2-to-1 trade. Really, the probabilities weren't really in my favor as the market changes. Sometimes that's all it takes as well. You know, you see the correlations with what is happening in the equity market and the euro dollar, and you've got to try and anticipate. But I'm going to leave this trade on because it is a good reward to risk. I'm happy to leave this over FOMC, and we'll see how this one plays out, and if there's anything else coming up on board. So I've just seen something here on pound against the Canadian dollar, and I'm just taking a short position, just finding resistance here on this 50 moving average, and the 100 has come down as well. Potentially the moving averages to start angling and fanning apart. If we get the order angle separation, we could get a bit of a run on this, and really target level is the daily 200 period moving average, so just above or just below the big round number of 2. So that's the target price there. Again, lower risk FOMC day, but still a healthy reward to risk if it does get there, of course, at about a 4-to-1 reward to risk ratio. So of course, with both of the positions we got happening now, you know, if they both win, one's a 6-to-1, one's a 4-to-1, you know, that's 10%. If they both lose, then we're only losing 2% risk. We're risking 1% trade. You know, if one of them wins and one of them loses, then we've still made money overall. Okay, so really that's the power of reward to risk and probability. You know, even if you're wrong more times than you're right, you still got probability in your favor as well, which really saves a lot of hedge funds. Most hedge funds only the best ones trade at a 50% win to loss ratio. Most of the time they get about 30-40% right, the rest wrong, but it's the reward to risk which makes it for them at the end of the day. So those are the two positions we're running, and we'll see how these ones play out. So just looking at this dollar yen position, I've just closed 75% of the trade, banked just about over just a shade under £1,000. So take that. I'll leave 25% of the position in. I've moved my stops up well above break even. So even if I did get stopped out, still bank a few hundred pounds on that. But we're running into FOMC. I'm just going to tuck it behind the last 4 hour swing low. In terms of the other trades, so dollar Swiss, we saw that trade turning, so we decided to close that at break even. If I just go down to the 10-minute, so we got in somewhere over here. Market didn't bounce, went a bit lower. Obviously, it turned around a bit later, but we got out of break even before it turned. Pound CAD, a bit of a an interesting one actually, because we moved our stops to break even. So remember, we got short around here, had a very nice run, moved our stops to break even, and actually just got stopped out on that at a break even level. So we didn't win anything, we didn't make anything, or lose anything either. So just a scratch trade there. In hindsight, could I have been a bit more? Could I have been less aggressive with moving my stop losses? Possibly, but you make a decision at the time with the information you have, and that's really all you can do at the end of the day. Obviously, everything's easier with hindsight. Nonetheless, we're still in the dollar yen position, and we'll see how this one. I just want to leave us just a small stake, really. Just want to leave a small stake over FOMC, just in case we do get a bit of a blast off. Of course, it's the risk is limited because our stop is well above the break even level, so even if it does turn around, then we've still made something. So right now, standing up around, what is that? So about £1,500. So not bad for the trading day. Let's see how the rest of the week goes. So that's it from me, guys. Hope you enjoyed this, and I'll see you next time.